Hey, what is up, guys? Doing a little bit of business travel and got a break in the lounge. Wanted to do a video for you guys and wanted to do something that's a follow up to a video I did probably about 3 weeks ago where I talked about um, not really being a big fan anymore of no money down deals. And not even a fan, not a fan. I just really am kind of against them. And I obviously have been doing this for 20 years. I've done a lot of no money down deals, help clients do no money down deals, and I'm against them for a lot of reasons. I would tell you to go watch and look for that video. But the biggest thing is that you miss out on the benefits of buying really great businesses because you're having to filter through the market to find those deals and those sellers that are really desperate. The truth is, what you should be trying to do is find great businesses. So over the years, I've kind of transitioned my philosophy and my strategy, learning from the pros and cons. I mean, when you buy a no money down business, in a lot of cases, a lot more work, a lot more headache, a lot more oversight. There's not as much growth potential. It's just a lot of downsides. It doesn't mean that it's impossible to pull off. And so, I think I've spawned a lot of people that are teaching those strategies now. It's one of those things that I wish I could go back and learn a little bit quicker and realize this isn't even what you really want to do. So, what do you want to do? I think the interesting thing is, as I'm helping clients now, in a lot of cases, I'm helping them start private equity funds. And with those funds, it's actually a situation where they can start those with little or no money. And what we're in the business of when we're doing these deals is money management, essentially. So we're investors. If you're a business buyer at the most basic level, you're just an investor. And instead of investing in stocks, instead of investing in real estate, we're investing in businesses. And a big part of being investors is being able to find capital and then put that capital to work, pay for that capital, and then make a profit. It's just like any other business. So you have whatever the cost is of you doing business, and you want to make more money from that than you're spending. And so what we help people do now is raise capital. In a lot of cases now, we're helping them put together their own private equity funds. And this comes with a lot of benefits. Number one is it puts you in the right mindset of building an investment company as opposed to trying to go out and just hustle and find that next deal that you're going to get with no money down. The other thing is you're building this track record that's going to allow you to get access to more and more capital. So, after we raised our most recent fund, we were able to use that track record to now take some companies public and get access to capital in some other ways. So it's one of those things that's really beneficial. If you can get to the point where you're building a track record, I almost recommend people now, if you're in this space at all, it's just a bad idea not to do it within a fund. I think a lot of people think that a fund is something that's out of reach for them. And I thought, before we started, I was like, this is going to be way too complicated. And the cool thing is, over the last 3 years, we've really kind of nailed that process of how do we build these things out? How do we make it make sense for small businesses? How do we make sure that the investors are getting the return that they want, and as far as the deal structure and those kinds of things, and then building the relationships with everybody that's got to be involved when it comes to creating a fund. And we've got a great relationship with the SEC attorney, the attorneys that are helping us internally with our deals, the fund admin, the auditors that are coming in each year. And so, we kind of built out that process to be able to churn these things out. And it's that realization that, there are a lot of things that Wall Street has figured out and has done right. And there's a reason that there are billions and billions of dollars that go towards private equity funds. And it's really simple. It's because that model works. So just want to encourage you, stay away from the no money down model, move to doing things the way that billionaires do things. And in those cases, they're just getting access to the capital and putting together deals the right way. So going to have some more videos coming that just go through this journey of creating a private equity fund even if you only have a little bit or even no money, how you can pull off creating that kind of structure for your deals. Check out the video. So if you want to find out more about that, be sure to subscribe and look forward to hearing from you guys.